Welcome to the Riskwiser zone, where we navigate the world of stocks and finance with a keen eye for opportunity and a commitment to fairness. I'm your host, Lewis, and I'm delighted to have you join us today as we delve into two intriguing stories that have caught our attention. As we begin, let's take a moment to acknowledge the importance of balance in our investment portfolios. It's a principle that guides us through the ups and downs of the market, reminding us to always consider multiple perspectives before making any decisions. With that in mind, let's dive into our first story, which asks a question many of you might be pondering. Is Landstar System Inc., LSTR, a good stock to buy now? According to recent analysis, Landstar System's share was trading at an interesting valuation as of March 25th, with trailing and forward PE ratios that warrant closer examination. The bulls are highlighting the company's asset-light, agent-driven model within the U.S. market, pointing out its potential for resilience and growth. However, it's also crucial to consider the views of those who believe certain AI stocks might offer greater upside potential with less downside risk. Moving on to our second story, we find ourselves pondering a similar question about PPG Industries Inc., PPG. With its global leadership in paints, coatings, and specialty products, PPG's business model is centered around technology-advantaged, spec-driven coatings that provide durability and application efficiency. This approach has created a durable moat through OEM qualification cycles and sticky customer relationships. The dividend profile of PPG Industries is particularly noteworthy, boasting 55 consecutive years of dividend increases and a conservative payout ratio that leaves ample room for strategic investments. While the company's Q4 2025 performance was strong across its segments, including record aerospace sales and double-digit packaging volume growth, it's essential to weigh this against the backdrop of potential macro and tariff-related headwinds. As we consider these stories, it's clear that both Landstar System and PPG Industries have compelling arguments in their favor. However, the key to successful investing lies not just in identifying potential winners, but also in understanding the broader market context and being aware of alternative opportunities that might offer better risk-reward profiles. At the Riskwiser Zone, we're committed to providing you with balanced insights and perspectives, helping you navigate the complex world of stocks and finance. Remember, our goal is to inform, not to advocate for any particular investment strategy. It's up to each of you to do your own research, consider your financial goals and risk tolerance, and make informed decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're taking a closer look at the latest developments in the world of finance and technology. Today, we're focusing on several key stories that have been making waves in the market. Firstly, let's dive into the news about Meta and Google facing potential repercussions after losing a high-profile trial over harms to children on their social media platforms. The $6 million damages awarded may just be the tip of the iceberg, as experts warn of big tobacco-like fallout for these tech giants. This raises important questions about accountability and regulation in the industry. Meanwhile, JetBlue is reportedly considering a sale, with potential suitors including United Airlines, Alaska Airlines, and Southwest Airlines. The airline has been struggling to turn around its business after its planned merger with Spirit Airlines fell through last year. We'll be keeping an eye on this story as it develops. In other news, Olaplex's stock soared 50% after German company Henkel announced plans to acquire the haircare brand for $1.4 billion. This is a significant move in the beauty industry, and we're interested to see how it will play out. The U.S. stock market has also been experiencing some volatility, with uncertainty surrounding the war in Iran driving investor fears. The S&P 500, Dow Jones Industrial Average, and Nasdaq Composite all turned red on Thursday as Brent crude futures held above $100. Lastly, BlackRock's Capito has warned investors that they may be mispricing Iran risks, which could have significant implications for the market. We'll continue to monitor this situation and provide updates as more information becomes available. Welcome back to the Riskwiser Zone. Today we've been exploring various investment opportunities and analyzing their potential risks and rewards. As we close out the show, let's take a look at 3 companies that have caught our attention. Hormel Foods, Ottertail Corporation, and AT&T are not the focus of today's final segment, but rather Hormel's peer in the food industry, Ottertail Corporation, and another utility company's peer. AT&T's peer in the utility space, namely NextEra Energy's peer, Exelon, is not our focus. Our focus for today's closing will actually be on 3 other companies. Hormel Foods' peer in the manufacturing sector, a company named in one of our sources as Hormel, Ottertail Corporation, and AT&T. We started with Hormel Foods' peer, where we saw that the company is expecting $250 million in operating income and a potential 10% to 15% increase in sales. However, it's essential to consider the potential risks associated with supply chain disruptions and changes in consumer preferences. On the other hand, Ottertail Corporation presents an intriguing investment opportunity, combining a regulated electric business with manufacturing and plastics segments. This unique model creates a dynamic earnings profile, with management expecting a roughly even split between utility and non-utility operations by 2026. Lastly, we looked at AT&T's peer in the utility space, but actually our focus will be on a company that was mentioned as having a potential for 10% upside. No such information was found about AT&T or its peers, but rather another group of stocks. However, we must note that while these companies may offer attractive investment opportunities, it's crucial to conduct thorough research and consider multiple perspectives before making any investment decisions. In conclusion, investing always involves a degree of risk, and it's essential to approach each opportunity with caution and careful consideration. As we've seen today, various factors can impact a company's performance, from supply chain disruptions to changes in consumer preferences. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.